What's the problem? Your share price is doing nothing.
Well, last week they announced a whole 85 meters at 0.69% NBTO5. If you convert that 0.69 into gold, it would have released intersection at 4.3 grams per ton. People needs to realize the value of that asset.
You're right. You put some drill results out and you expect people to interpret it, but that's not their day job. You can't blame the market for not understanding a commodity which no one really talks about because it's smaller than uranium. What are you going to do about that? Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up. And if you could leave your comments below, it just helps us understand what your questions you'd like us to ask, what you're thinking, your views on the company and so forth. So please do that. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, if you want to see more videos like this, click the notification bell. We spoke earlier today to Claude, who is the CEO of Niobay Metals. They're a niobium explorer with assets in Canada, listed on the TSX-V. Very small market, 3 to 4 billion in size. We learned a little bit about the players. There are only 3 to 4 players in the world. These guys happen to be a new entrant into that space. Niobium is mainly used in the production of steel. It gives it lots of wonderful properties like flexibility and lightness. So we talked to him about some of the things that he's going to try and do this year with the money they raised in December. They're good to the end of this year where they will produce a PEA, or there may need to be another little raise in the third or fourth quarter, depending on some of the choices they make. We talk about a lot of different topics, so do take a look in the description below. If there's anything that interests you in particular, click on the relevant timestamp. That'll take you to that part of the video. So let's hear what Claude had to say. Hello, Claude. How are you, sir?
I'm doing great. Actually, beautiful day here in northern Montreal. So spring is here, and hopefully summer will be on our door in the next few weeks.
Now you got a pretty nice scene going on the back there. You look like you're up in the woods in a log cabin. Am I wrong? Or?
Yeah, actually, we're fortunate enough. We have a cottage. Actually, we call it cottage up here.
Yeah,
it's about an hour and a half drive north of Montreal. So I've been sitting here for the last month, and I believe we're still going to be here for another couple of weeks until we be able to go back in the city. Yeah.
Beautiful. Well, that looks like a gorgeous setting, right?
Beautiful scenery. Yeah, exactly. Great.
Well, why don't we kick off for people new to this story, which I suspect if you give us a 1-minute overview of the business, then we'll pick it up from there.
All right. So it's very simple, Matthew. We're Niobay. It's a company that focuses on critical metal, but our real focus is really on one metal itself. It's niobium. It's a metal that there's just a number of producers out there. Actually, there's 3 producers in the world, 2 in Brazil, 1 in Canada. And I ended up getting exposure to the metal in the beginning of 2000. I got involved with the Quebec operation of niobium. It's called the Niobec mine. So I've been in the niobium space for about 15 years now. So I that's pretty much why I'm CEO of that company, and we focus on the metal, and we believe that we will become the 4th producer. We own a great asset in Northern Ontario that has been drilled in the 60s. Everything has been done. The feasibility study, unfortunately, at that time, the economics were not there, but definitely this year looks pretty good that we'll be able to build something up there.
Okay, and before we get into your business model, let's try and understand what the niobium market is like. Used in steel, it gives it a lot of properties that it has, but why don't you talk through some of those properties? Maybe it gives a sense of the size of the market and therefore the size of the opportunity, if there's only going to be 4 players.
90% of the niobium goes in steel. The other 10% is used in the, I will say, the high technology space, which that's an area that we're not focusing on, obviously. So the market size for the steel grade, we're looking at around right now of 100,000 tons of niobium. It's I will say close to $3 to $4 billion market. So it's not a big market at all. But what's unique about that market, there's just, like I said previously, there's just 3 producers. One producer in Brazil named CBMM control 80% of the market. and the other two producers are pretty much sharing the other 20%, roughly about 8 to 12% each. So I think a fourth producer, it's not going to impact the big producer, CBMN, because the market is growing so much that our additional capacity in the market by the time we'll start producing will be just a blimp in terms of the total sale of that big guy. So
okay, and so
we're optimistic about yeah.
So it's steel. I'm assuming a lot of that therefore goes into China. But who are the other players in the market that buy this? I mean, I don't know too much about the niobium market, so apologies.
All right, sorry. The steel industry, ThyssenKrupp in Europe, ArcelorMittal around the world. The Chinese steel mills are the end user of the metal. And what it does to steel is strain up the steel, make the steel stronger by adding just $5 to $10, $5 to $7 worth of niobium in a ton of steel. That will have a major impact on the strength. And having a higher strength, you're capable of reducing the weight of the steel part, or the thickness of the steel part. So you're saving a lot in terms of steel, but also you have a positive contribution to the reduction of the CO2 emission.
Right. Okay. So there's going to be lots of applications for that. For building skyscrapers, for instance, you imagine would be the main use for that. But okay, we can get into that later. But let's come back to the business model. I'm always fascinated what's going on in the minds of the board. You've been in this industry 15 years. You tell me how long have you been involved? What did you set out to try to build, and where are you with that process today?
Well, why like what amazed me with that business is the profitability of those operations. Like the Niobec mine, which is up in Quebec, is the highest cost producer. It's an underground mine that has been in operation for 44 years now, and it's still got 20 to 30 years of a mine life. They're pretty much generating closer to 140 to 150 million US dollar. And that's the highest cost producer and the smallest producer. So it's those are cash cow, we can say, those operations. And you could just imagine about the big producer how much cash they are generating. So it's appealing because there is obviously other projects out there, but none of the other projects in the world are basically could run for a number of reasons. So we own a deposit that is pretty much alike like the one in Quebec. So obviously we're looking good in terms of upside going down the road there.
Okay, but
as we're going to de-risk the project, yeah.
Yeah, okay, but so I understand what attracted you. There's very few players. It's a high margin commodity. But when you first got into this, you must have learned a few things along the way. But when did you identify this project? And how did you acquire it? And what was it that you're trying to build? Because I'm interested in this because, great, you've got stuff under the ground. But for me as an investor, I'm trying to work out where I make money. So tell me about the origins of this, and then we'll kind of walk down that path together to sort of see where the value comes.
I got involved with the Niobec mine, like I said, that in early 2000, and at that time I was owned by a company called Cambio, and I became responsible for the sales and marketing of the metal. So I've sold the niobium all the way up to 2012. At that time, the owner of the mine was IAMGOLD. And IAMGOLD wanted to divest the asset. So they ended up selling the asset to a fund called Magris Resources, which they ended up buying it for $500 million US. That was in 2015. So that was, but my time was due. So when I stopped working with Niobec in 2012, I ended up working. I got hired by Niobay, which had another niobium project in Quebec, which was the quality was not as great, and the goal was to focus on finding another Niobec mine. So we've discovered. Funny enough, my geologist discovered that asset on the internet, I realized that there was an old deposit, a carbonated deposit in northern Ontario, and so we started digging into it. It's been shelved since the 60s. And it took a while for us to contact, to get a hold of the owner, because the owner was not even aware that he owned the asset. So we ended up digging into it, and it took us close to a year to finalize the transaction with the owners. That was in 2016. Yeah. So our cost was I think $50,000 cash plus $300,000 worth of stock. For an asset that we believe is worth $1 billion now.
Okay, that's how you kind of got into it. So you've got all this historic data. Which I love the fact that someone found it on the internet because the person who owned it didn't know they owned it. That's fantastic. So you've got a lot of historical data. You've done some analysis, before you bought it, and since you've had it, what have you been doing? How much money have you spent on this thing, and to what end? What are you trying to do at this stage?
Okay, well, so we acquired that in 2016, the asset, and soon after we went through all the database of all the historical data. So lucky enough, we had access to all the historical technical documentation. So we went through all of this in detail, and we also had access to all the core. So imagine that the core were 50 years old, and they were all sitting up in Moosonee in an old building. So all the core was there. So what we ended up doing is we'd hire an independent firm to look at the possibility of doing a 43-101 on the resource without doing a drill hole. So in 2018, we published a 43-101 resource based on reanalysis of 12 sections throughout the ore body, and the assay came back in line with the historical results. So we had our PEA there, our resource estimates. And following the 43-101, what we done internally, we hired an engineering firm to do a scoping study to see if there were any challenges and what will be the potential value of that asset. So we didn't want to spend too much money to have a 42-101 resource study, but that was good enough for us. And the result coming out of that scoping study indicated that you guys seems to have a high-grade zone running deeper, and you should test that. So we knew that we wanted to go out and drill to get some core to improve, to do more metallurgical test work. So, but I said, where we're going to put the hole? We already have a resource there that is at least. Will support a mine for 20 years. So it said our goal was really not to increase the resource, but more to try to find high grades within that ore body. So that was the conclusion of that scoping study. And so we've basically we've been focusing on that specific aspect. So we started a drill program early this year. Unfortunately, we managed to complete it before the crisis hit. So we get all the core out. We released last week our first set of results, which were above our expectation. To be honest, there's definitely a high-grade zone that seems to be running further down at depth and heading north. So we're looking forward to get the assays of the second hole to be able to disclose that to the market. But we believe we'll be able to extend the high-grade zone further down at depth. And our next step following that will obviously going to be a resource update. And following the resource update, then we're going to start working on the PEA to be completed by year end.
PEA by year end.
We're trying to fast track that up.
Okay, so you bought it cheap in a high margin, with a high margin commodity. Very few players in the marketplace in terms of competition. What's the problem? Your share price is doing nothing. Your market cap is whatever 14, 15 million. It's a joke, right? So why? Tell me why.
Well, the first reason, Matthew, and is because investors don't realize the value of such an asset. I'll give you an example. Last week, we announced a whole intersection of 185 meters at 0.69% NB205. So what most investors has no idea what that means, but if you convert that 0.69 into gold, that would have been that if you would have released 185 meters intersection at 4.3 grams per ton. So that would have probably we could have seen a pop in the share price. So the challenge is for us is to people needs to realize that the value of that asset. Some investors do. So that's one. The other thing is there's a lot of people that are afraid that CBMM could squash us out by the time we'll get into the production.
What do you mean by that? Tell me what you mean by that.
Well, CBMM is the largest producer in the world. They have the supply right now to supply 100% of the world demand, right? And they had the demand to supply 100% of the world 10 years ago. They had it 20 years ago, and they're going to have it in 20 years from now, right? So CBM is such a huge operation and a profitable operation that they're always going to build up capacity to supply whatever the world is in need. But in reality, how it works is, remember, I've been selling the metal to the steel guys, and you sit purchase manager, and the guy wants to do is he wants to secure a supply from you, from Canada. Then he's going to go with the smallest Brazilian supplier if he wants to buy from more than just one sourcing, and then the last one will be CBMM. So CBM always ended up the swing supplier. So if demand grow, well, they got enough coming from CBMM, and if it's going down, then CBM is going to sell a bit less. And they have no problem with that. They've been doing that for years. Like I've been in the 2008 crisis, and I tell you, we've sold all of our production in 2008, 2009, and 2010. And the market in 2009 dropped almost 40%. And guess what? The price was pretty much the same, but CBMM price sales dipped because they're the swing supplier, and they didn't want to chase the market, so they haven't moved the price up. They knew the market was going to come back. So, okay. So a lot of people believe because they're so dominant, they could squash any newcomers. And also our strategy to enter the market is, it's funny enough, we want to be the smallest producer there. And we don't want to have more than 5% of the world market.
Okay, but you're saying that as a stretch. Most people want to tell me they'll go from 5% to 10% to 20% of the world market. But you're saying it's better because of the way that niobium is purchased for you to be a small player, because that's the first person, they're the first company that buyers will come to, because they don't want to give CBMM the leverage. Is that what you're saying?
Well,
how do you position yourself is what I want to know.
The thing is, the end user wants to secure their supply, right? And if they don't want to deal with just one supplier, that's the last thing they want to end up doing, because you never know what's happening in Brazil.
Price fixing. Yeah.
Exactly. So there's too much risk. So that's why they're always going to support the smaller producers, right?
Okay.
In that special market, I mean. And it's going to get more and more important as CBMM market share is growing so much because the demand is growing, and the other producers cannot keep up with that.
Let me come back to point one you made, which was the market doesn't understand. I mean, I don't think it's the market's problem, it's your problem, right? So you need to explain it better. And your example just then, when you convert it into gold, okay, I understand. That's a good number, right? But you can't blame the market for not understanding a commodity which no one really talks about, because you say there's four players and it's a $3 to $4 billion market. It's smaller than uranium, which is a small market. Uranium's like a $10 billion market. So you can't blame people for that. So what are you going to do about that? How are you going to get out there and make it easier to understand? Because otherwise, you're right, you put some drill results out and you expect people to interpret it, but that's not their day job. They're trying to work out where do they make money, and it's your job to help them. So how can you make it easier for them?
Well, obviously, the more meetings, the more video conference like we're doing now will do the better for us. Now that we're building up the high grade resource and the project is moving forward, we're starting to draw a lot more attention. That's what we're starting to realize now, and it's going to be, we're going to continue to bang and to do a lot of promotion to explain what we're having, and basically what's the value that Niobec could end up doing. And at the end of the day, I wouldn't be surprised that somebody's going to take us out, but it's too early right now. We need to de-risk it and have the PEL, but the PEL will come up with some hefty number.
That's exactly what I want to talk about. I want to know exactly what your end game is here. Do you want to get this into production and be selling niobium into the marketplace, or do you want to be taken out? And if so, at what point? You've got a PEA by the end of this year. You're then going to have to do pre-fees, feasibility, DFS, etc. Are you open for conversation during that whole process, or are you going to wait until?
Of course, yeah.
You are.
No, listen, we are open, because especially now, Matthew, the market, because of what's happening now, changed. And obviously, to raise capital is always a risk. It's always a challenge. So if we could have a strategic that is showing interest, and we know it's financially solid, obviously it knocks on the door, and we know that we'll have a secure funding to bring that project along. Of course, we'll listen to what they have to say, and if they like the commodity, for sure.
Can you tell me a bit about your background? I mean, I know you were in the sales up until 2012, but who on the team is the technical person?
Well, actually, I'm a mining engineer by trade. I worked 10 years on the gold side of the business, then ended up in sales and marketing. And also, our largest shareholder is Osisko Gold Royalties, which you probably heard of. Our office is within their office, or they have 2 floors. There's the upper management on the 3rd, and 2nd floor is all the other Osisko companies with all the technical staff. So we're very well surrounded. If we have any question on geology, on metallurgy, on whatnot, so we have that offhand right now. But independently, we're doing our all the study with a small firm called G Mining Services, which our ex-Cambior manager and these guys have expertise in the niobium, because they help building Niobec expansion. So we try to remain independent, technically, but on the day-to-day basis, we have access to all that knowledge that is just an office away from mine.
Okay, and who do you talk to about money?
Excuse me?
You talk to them, you talk to Cisco about technical questions, but who do you talk to about money?
Oh, of course. They own 20%, and we did a small raise before year end last year, and they chipped their share. But there's only so much they can do right now. They own 20%, so they don't want to get more than that level at this stage. So, I'm pretty confident they'll be there. If we do another raise, they're going to maintain their 20% share.
Okay. And how much did you raise?
We did $2.3 million.
And how much cash have you got in total?
I think our financials are going to come out in the next month, but right now I think we're $1.7 million in the bank after spending the drill program, after completing the drill program.
Okay.
So we had to run 3 point something a year in, and I think now we're down to 1.7.
And where does that take you through to? Where does that give you a runway till the end of this year?
Yeah, we're good till the end of the year. Our most important task this year is to get the PE out, right? And we're good with that. So we have all the funds to do it.
Brilliant. So once the PEA is out, you know a bit more. You're going to raise some more capital and just go through the phases in terms of the study phases.
Correct. Yeah. What we're trying to do, because where the project is located, we're on the part of traditional territory with the local First Nation group called Moose Cree First Nation. So we want them to work with us this summer to start working on the baseline study.
Okay.
So we had some discussion with them this week, actually, on that specific project. So being ahead of the curve, knowing that we're very confident about the outcome of the PE, we want to start working on the baseline study. So if that's the case, then obviously we might have to raise a bit more capital in the third quarter or fourth quarter to support the additional work that we have in budget this year.
Okay, so you may need to raise money third or fourth quarter this year.
Correct.
Okay. Fine. And with the First Nations obviously need to be heavily involved. Are there any other, and you'll let us know, or let the market know how that's going once you've resolved or got agreements in place. Are there any other permits, licensing issues that are outstanding at the moment?
For what we have to do, no. Obviously, but as we're going to develop a mine, of course, there'll be a zillion quantity of permit that will be required, right?
Okay.
But right now we're good to go for what we have to do, right?
Beautiful. How much money have you put into the company?
Myself?
Yeah.
I own 1 million shares, so I probably put 450 grand.
So you bought in the open market, have you?
And private placement, yes.
And private placement as well.
Yeah.
So how many shares are there?
We're 52 million shares out.
Okay, that's good. And what about the rest of the board? Have they been investing? Did you invest in the last round, for instance?
I did, yeah. I put 50 grand in the last round. And in Quebec, we have what we call flow-through, which is certainly some fiscal advantage. But I took the hard dollar one to give space to people putting flow-through money because we didn't want to raise too much flow-through. And the board a lot of the board members did the same. Our chairman did the same. I must say there's most of the board members are heavily invested in the company also.
Okay, and how are you incentivizing yourselves? Because I'm not seeing big salaries being paid, but how do you remunerate yourselves?
Well, I think it's all public information. Yeah. Where like in the last 2 years, I made $200,000 a year. That's it, and no healthcare, nothing. Is basic salary, and that's it. I'm the only full-time employee. Our CFO is a CFO of 2 other junior mining companies that belongs to the Osisco group. Same for, we have one guy that is looking after the Aboriginal and governmental affair. He's an ex-SVP of Detour Gold. He's part-time basis. My geologist is part-time basis. So we're trying to keep the G&A as low as possible.
No, okay, that's good. Thank you for answering that. What is your preference for the point at which you exit?
You know what? The market is changing day after day, Matthew. It depends where the market is. Right now, it's a bit. My goal is to get that mine up and going. Is it going to be private in 6 months from now or in 3 years from now? I guess it's going to be depending on the market more than my own preference, right? Unfortunately, I cannot decide when I'm going to become private. Right? It's not my decision. If somebody come up and then they made an offer, it's obviously the board will have to decide. It's not going to be my decision.
But you think that it would go private rather than to another public company?
Listen, if you look at that type of business, all the other producers are now private. There's one mine that used to belong to Anglo in Brazil called Catalan, and it's been bought by the Chinese, China Mali. They paid over $1 billion for the asset in 2016. So now it's all private. So the last thing as a company, and those are cash cow, and there's a lot of private money sitting on the side, and they're not too interested in putting it publicly. And so once they realize that and will be able to continue to de-risk the project, they'll it's pretty attractive. In terms of investment, we're looking at around 300 million US in terms of capex, and we believe our cost should be in a range of $20 a kilogram NB now per niobium, and the stuff is sitting around $40 a kilogram right now. So it's 100% margin. So that you made the math. You got to go to return.
You get a good return.
Yeah.
Well, Claude, thank you so much for running us through that. Interesting little story. Very interesting. I wish you well with this year. Obviously, got a few things to get over the line. I say de-risk, get the First Nations on board. I would be delighted if you would pick up the phone and let us know how you're getting on, because it's a very interesting little story and very interesting space to be in.
It is. The reality is the Europeans, from my experience, know much more the value of that asset than the North American, because it's used in a variety of, obviously the steel in Europe has been a big consumer of niobium for years, ahead of North America, and obviously much ahead of the Chinese. But Europe is a big consumer of niobium, and not only for the steel grade, but other applications. So people are well aware, or more aware of niobium than North America.
You may well be right. You may well be right. Well, I thank you for your time today, and we hope to speak to you very soon. Thank you.
I'll keep you posted. Thanks very much, Matthew.